Good afternoon, MMTs. Welcome to this fine Saturday morning. Welcome to the monthly chart NASDAQ 100 Volatility Index called the VXN. What's important about it is that when markets put in tops, you put in lows here, like we did on this monthly level in calendar 2011 over here. We shorted the market back then on 6/1 of 2011, and that thing went straight up. Then we get into this calendar 2012 period when we rallied up in the broader NASDAQ 100 and NASDAQ Composite, but particularly here and here. And you have so go look at the other videos that I did this morning for our MMT market makers and our investors and traders. Is what I really want to point out, even outside of the high frequency trading has driven these levels to where there is no fear in the market. And when the NASDAQ Composite went down and the NASDAQ 100 went down, these 2 months we went straight up. Now we've had a pullback here on this monthly level. Back here in 2010, we had the same fear that shot straight up, came down, and then we rallied, and this fear indicator went to very complacent levels as it's doing right now. Now, each one of these cycles in high frequency, that it's the computing machines that are developing these fear indicators the way that they are. It's not so much the humans. When you go back to 2001, when we had fear way up here, in 2008 in the financial crisis, when that thing went barreling higher, man, we were making lots of money on the short side of the market. But then when it came down, it was time to be long. And this is a multi-year, I mean, you got to go back to levels 2005, where these high-frequency trading programs on the indexes have driven these things to these monthly support lines right here. But here's a lower line. It's not unheard of as the markets go up and put in their higher resistance levels. These are going to hit a bottom. The less fear, the higher the complacency level, the bigger the correction around the corner is coming. So what we're going to tell you is all you need to do is stay up to date here relative to the NASDAQ 100 and NASDAQ Composite. These two components are tied to this, called NASDAQ 100 Volatility Index. I will tell you that markets make their moves. When we had the big rally in the market in 2011, we got to the highs here, but when the markets rallied, this went down on a monthly level. It spiked, but it continued to go down. We were involved. The market put a top in right here in 2012, and we popped up. And that's when we were shorting the market. And there's a lot of training that needs to be done on it because it's not so much humans anymore. It's the high frequency trading programs that get these to this very extreme levels, where in the past, in all of the years, people think that it's the humans that are scared. No, machines beat them out of the market. And we're going to let you know, that it's safe for you to return to the market and how to beat high frequency trading programs. Okay, because it's true. And, you know, you have every right to be involved in a market, but you also have every right to understand how high-frequency trading has changed the exchange model forever. We've been telling people this for the last decade, for over 10 years. No one's ever paid attention to it. No, they don't. However, we felt that now that they're talking about a lot about this and the exchanges that need to regulate, make things fair for people like yourselves, we'll tell you how to beat those machines. All you have to do is stick with stockmarketfunding.com there. I am going to say that we can come down a little bit lower level, but the lower the level that we come down, the higher that the resistance levels are going to be in play. So we travel up in the NASDAQ 100 and NASDAQ comp. It's going to be harder to get through resistance levels because of the imbalances in the markets that the high frequency trading algorithm machines have caused a complete imbalance between the put and call ratio volumes that I showed. I showed the indexes. I've showed the fear indicators. I've given every MMT the perfect recipe to make a lot of money here and now, because the markets will make a high frequency change. And when these markets start to sell off, it's only because of one thing. They make changes even in the high frequency computing programs and the software programs, will make their changes as these things come down and hit their levels, meaning that things, individual names, will start selling at resistance levels. So once again, I'm not going to spend all day in this video telling you how it works. MMTs, you know how it works. That's what I care about. Hedge fund managers, big institutional traders, I'm telling you, it's the high frequency that has driven these down to this level. But at some point, for you bigger money guys and gals, is that high frequency will change based on this VXN related to, let's keep the reality, NASDAQ 100, NASDAQ Composite, these two units right here. They've rallied significantly up into the resistance channels. The higher that they go, the little bit lower that we inch down here on this fear indicator, and that's what the monthly level looks like. I can show you on a weekly level very quickly. On a weekly level, and this is what it looks like in this format versus your monthly chart. I use the monthly, but we'll take a look here just at this area on this weekly level now. Is what I want to show you is that we're coming down here on this weekly level to this major line that we'll be watching in the short term. That's going to be right here. We're sitting right there. 2011, market sold off hard when we got down there. Market sold off extremely hard over here on 4/11 of 2010 when we were short in April, and we have all the live videos. But then when this thing goes down like it does, that's the perfect time to be long, and the less fear there is. Now, is it human fear? No. There's not enough of you humans involved anymore. It's high computing frequency trading programs that's mainly involved. Then you got the big money that's involved that make their adjustments with buys and sells. But for more so for the intraday and the weekly level type trader that can make a lot of money, all you need to know is that the day trading style is out. And the new style and everything that we've been preaching about for the last 10 years about high frequency, from black box algorithms into newer technologies that are available and routing systems, because it's your routing systems and high frequency options trading systems are now in play. So once again, we want to let you know that when this thing puts the bottom in, and the less fear there is, there are a lot of bear ETFs that are at their bottom in the NASDAQ 100 and the NASDAQ Composite. Once again, fear levels at multi-year lows on a monthly and a weekly level. Okay? And here is the monthly level. We'll cap it that way, and we'll let you see what that lower pocket looks like when markets take significant turns. They make big turns.